Hello everyone and welcome back to another Trade Journal episode on my 2-hour MSB model, where today I want to show you the one setup you should be looking for daily. As traders, we often have the tendency to look for the big shot, the one trade that makes you all the money at once. However, these trades are nothing but a pipe dream. The reality is that real trading success lies in consistency, in regularly managing 2 to 3 R trades and another 2 to 3 R trade and another one and over again. However, how do you find this setup that may give you 2.5 R daily? How will you manage to really participate in these big moves and enter maybe here and again enter a trade here, potentially over here and again over here? This is exactly what I would like to show you today in this video, so stay tuned until the end. Obviously, it all starts with having a clear plan, and this plan relying on identifying a bias to be able to position yourself on the right side of the trend. If you want to know more on how I define my 3 types of bias and what my rules are, then watch the video I will link to at the end of this video. But now let's jump right into our first example. Jumping back to the 1st of June, 8 o'clock German time, when you potentially would have performed your daily trading routine, you first of all obviously would have realized that yes, the trend on the 2-hour had been broken to the upside, so bullishly. Secondly, you also would have realized that price had entered back into your area of interest. All of that in the context, of course, of a bigger 2-hour uptrend and supported by what price also entering this bigger picture target box, or if you pull it back to here, still touching the 618, and even if you pulled it from all the way down here, we still would have been within a discount area with touching the 0.5 fib. In other words, your basic criteria for taking a long trade, bullish bias inside of an area of interest would have been fulfilled already. You then obviously would have had to zoom into the 15-minute to find a possible executionable setup. So let's do that. Going through your entry trill, you then would have asked yourself, displacement above an old high? Yes. Market structure break. Any fair value gaps? Yes. Tiny one here down at around 4,183. Lining up with a potential target box on your entry time frame? Yes again. Potential sweep of the lows? Yes. Within a target box again. And that then would have left you with placing your potential trade, managing your risk on the lows, aiming for roughly at least 2.1, maybe going for these highs as you'd assume that this is bullish, and then adding a second take profit for maybe these highs or roughly a 3-to-1 trade. Letting it play out, let's see what happened. Indeed, we did make it all the way down, grabbed the liquidity, then shot up, and if you have a look and use the time tool, you realize that this only cost you around 2 hours and 15 minutes. Trade done. Next up, June the 6th, where the actual setup took place in the afternoon at around 6 o'clock in the evening German time. However, not to cherry pick, let's jump right back into the charts at 8 o'clock in the morning German time for our morning routine. This is what your chart looked like exactly at 8 o'clock, and as you can see here, we broke the lows, so your bias for the day obviously first of all would have been bearish. Zooming in more and forward the chart a little bit, we realize, however, that at the latest at 10 o'clock in the morning, you would have had to switch your bias. All of a sudden, you would have broken the highs and the 2-hour bias would have been bullish for the day. So what next? Bullish bias means find an area of interest and then on your entry time frame, wait for a potential entry. On the 15 minutes, you nonetheless would have been cautious. Why? Because this latest low, which was caused by this high, hasn't been broken yet, so no displacement above. Even so, you could identify a fair value gap within a target box. With this high never having been taken out, you would then at least suspect the lows down here to be run before a real move. So again, let's forward the chart and see what price action gave us that day. Here you see it. We even took out these lows, but then finally really displaced up and also broke our market structure here on the 15-minute bullishly. Going through your entry criteria, you then would have said bullish 2-hour time frame, yes. Bullish 15-minute displacement, yes. Fair value gap, new one identified here, so yes. All of that within a target box on the entry time frame and another tick for yes. Meaning for you, set your trades and forget. First take profit 2-1, second take profit 3-1. Let's play the chart and see what the price gave us. It took some time, but eventually made it up to our targets. What should be your crucial takeaway from this second example? You want to see real displacement and not only on the 2-hour but also on your entry time frame, the 15-minute. To round off this little case study and prove my point, let's also have a quick look at the third example from June the 8th, midday German time, forming around here, and example 4, June the 9th, in the afternoon session, 4 p.m. German time. Both cases worked exactly the same. You had a clear bullish bias. You had a return to a target box on your trend time frame, the 2-hour. So all you now would have had to do is look for your setup on the 15-minute. Looking at your checklist on the 15-minute, let's say for example around midday here, you then would have said, yes, we have seen a market structure break and our target box there, no fair value gap this time, however, therefore a potential sweep of the lows possible. All of that in mind, you would have set your trade again, and as you can see, it would easily have worked out for a 3R trade and even more. Let me know in the comments, do you have a similar setup yourself? Do you have a checklist you religiously follow and make sure you stick to your rules to achieve consistency? Comment below. Before we conclude, what can we say about our fourth example? Clear displacement, obviously, then return to a fair value gap within, yes, you guessed it, a target box. So obviously you could have set your trades, stop underneath the low. 2R wouldn't have been a problem. 3R wouldn't have been a problem either. Summing it all up, am I saying that you would have caught each one of these moves? Potentially not. Life gets into the way. You might not have the time, other things to do. There are emotions. You might be ill. Nonetheless, the setup is there, and I believe it is there each day. Whether it is in your market, well, potentially not every day. Nonetheless, if you go for the boring and steady 2 to 3R trade each day, your trading will be successful and your equity curve is going to thank you. guys, if you like my content here, if you want to support me and the channel, then please leave a like, support the channel, subscribe, and talk to you in the next video. Bye bye.